If there's any chart you should be focusing on right now, it's this one. This holds the key to your success in 2023, but also 2024 and beyond. These are the patterns that are worth remembering because they are cyclical. They tend to repeat and they can give us an insight into what to expect in the future. This is what we're going to be talking about in today's video. Subscribe to the channel for more videos like this in the future. Like the video if you enjoy content like this going forward, and let's dive right in. So let's really break down each of these pre-halving years, because this is what we're going to be looking at. Pre-halving years across time, 2015, 2019, and 2023. So if you focus first of all on these macro accumulation ranges, the red range high resistance, the green range low support, you can see that these ranges tend to replicate across time. They are wider in 2019. They seem to be a little bit larger in 2023 compared to what we saw in 2015. But the main takeaway here is that we tend to see revisits of the macro higher low later on in the pre-halving period, which gives us a potential opportunity to bargain buy at that macro higher low later on in the pre-halving period, which is the orange box, because the pre-halving period, the orange box, is just before the halving. That's when we tend to see volatility to the downside prior to the halving. And one of the other things to mention here is that we're currently 200 days before the halving. We're 200 days before the halving in April 2024. So it's important to compare what happened in 2015 at this same point in the cycle. What happened in 2019 at this point in the cycle, so that we can better be informed what could happen in 2023 at this very same point in the cycle. So moving on to that next chart, the next key chart, and that's minus 25% downside at this same point in the cycle. Yes, Bitcoin did break out from its macro accumulation range, but it did also retrace minus 24% after that breakout. Yes, it did retrace in a reaccumulation range, which consolidated for a few months before we got finally closer to the halving event and then broke out to the upside. So retracement is still the name of the game, even if it's in a reaccumulation range. That's something to bear in mind when it comes to 2015. 2019, we saw a relief rally at this same point in the cycle, but then we dropped 37% towards the downside. And I'm not even talking about this entire downside to the macro high low. I'm just talking about the 37% downside that occurred right after the relief rally. And you can see this relief rally a bit clearer right over here. We saw a relief rally to form a new lower high at the same point in the cycle before retracing 37% and then rallying once again for another relief rally to form yet another lower high. So that's 2019. So 2023 really, from current price levels, to reach this macro higher low for the first time in this cycle, because if we cycle to this first chart here, we saw in 2015 a fourth touch of the macro higher low. 1, 2, 3, and 4. And in 2019, 1, 2, 3. And in 2023, 1, 2. And we could revisit this macro high low later on in this cycle for the very first time. Revisits of the macro high low tend to occur, and for that to happen, we'd need to see a 27% retrace, which has happened before. After a breakout in 2015, we saw a retracement, which was very healthy, of 25%. And we can't say that as cycles progress, these retracements get shallower because we see a bigger market cap and the volatility narrows down or whatever. That's not the case, because in 2019, which is a cycle later than 2015, we saw minus 38%. But we just need a 27% retrace to revisit this macro higher low. And people tell me all the time that we're not going to get a COVID-like crash into the higher low. We don't need a 70% crash, which is what we saw in COVID. We only need a 27% crash into the macro high or low. That is simply the reality. So that's something that we need to really consider in this pre-halving period. But in the meantime, we need to really focus on these bull market EMAs, the bull market support band, which is the purple 50-week exponential moving average and the green 21-week moving average. And we tend to see lots of oscillation around these moving averages. You can see upside, downside, upside, downside, upside, lots of oscillation around these moving averages. And you also saw this in 2015 around this point. But once we saw a breakout, we held these as support, and we held these EMAs as support for the entire duration of the bull market, much like we did after the halving. So what I'm expecting is that we'll probably hold these as support also after the halving, but in the meantime we could see lots of oscillation around these moving averages. And at the moment we saw a retest of this cluster of EMAs. Now they're acting as resistance, but there is scope for some upside deviation, just like we saw here, just like we saw here, and even just like we saw, for instance, here, upside deviation beyond here. I feel like in 2023 we could fail to hold these cluster of moving averages as a support, but deviation beyond the bull market EMAs is possible, like we saw in 2019, and only after the halving I expect these to hold considerably, sustainably for a long period of time until new all-time highs, but only after the halving. So relief rally beyond here to form another lower high, that's something that could occur, just like we saw over here in the pre-halving period of 2019. But we really need to just focus on really what's at stake here, the pre-halving period across time. You can see that this 25% retrace is very small. It's a really significant blip in the prospect, or at least in the context of what occurs after the halving. So anything in this pre-halving period is a fantastic bargain buying opportunity. Any retraces, whether that's 25% or even closer to the halving, around 38%, these are opportunities to shake you out and make you capitulate in your Bitcoin position. But also on the flip side of that, you can become a bargain buyer and really scoop up prices at a discounted rate during this pre-halving period. Same thing here in the 2019 pre-halving period. Any downside is going to make you panic sell your position and capitulate before enjoying post-halving parabolic price action to new all-time highs. So the same thing could happen here. We could see downside, and any downside would be an opportunity for bargain buyers, but at the same time for holders, don't capitulate, don't panic sell, and if anything, FOMO in on the retrace. Don't FOMO in when we're going to be enjoying red candles, which could be relief rallies. FOMO in when we're going to be seeing strong crashes or any retracements whatsoever, because a 25% retrace can occur in this pre-halving period. Around the halving event, a 38% pre-halving retrace could also occur. And over here, we could see a retrace also occur in this pre-halving period. But we have to understand that we are 200 days before the halving, but we need to really focus on that pre-halving period in accumulating for the next 550 days of parabolic price action towards new all-time highs, or 518 days of post-halving parabolic price action to new all-time highs. If it's going to be 518, let's say it's the shorter end, October, September 2025 is when we'll peak at new all-time highs in the 2025 year, in that candle one of the 4-year cycle. Really important to be preparing for this post-halving parabolic price action in the pre-halving period. And we have 200 days left of this pre-halving period. We could still see downside like we saw in 2019, and also we could see downside like in 2015. But could it be downside within a reaccumulation range before a breakout? Or could it just be downside without any reaccumulation before a breakout towards the upside? Whatever the case may be, we might be seeing an opportunity for downside, whether it's downside within a reaccumulation range or downside within an already established downtrend like we saw in 2019. Whatever the case, any downside needs to be taken advantage of. Any downside needs to be utilized as an opportunity to position yourself for the post-halving parabolic rise in price action. And once we get clear of this pre-halving period, after the halving, we're going to see over 500 days of bull market continuation to new all-time highs. It's going to be something really to look forward to, and the positioning of yourself in preparation for that starts now, and we have 200 days to position ourselves accordingly. I hope you enjoyed this video. Check out the video in the top right hand corner to learn more about other videos that I make. Subscribe to the channel for more videos like this in the future. I hope you enjoyed this one. Subscribe, like the video, and I'll see you in the next one. Speak to you soon.